U.S. indices have been rallying up to new all-time highs lately, but can they keep the party going? It's difficult to say at this point. I mean, certainly on the liquidity side, the Fed and other central banks remain supportive. That's pretty good. We're still at a relatively early stage in the cycle. We're not seeing much any central bank tightening anywhere really, so that supports stocks. And the economies around the world have been pretty good. I think a lot of the worst of the Brexit fears haven't materialized, and some of the other fears that knocked markets down early in the year have turned out to be overblown. So that's been supportive on the corporate earnings side. But in the short term, markets could be due for a bit of a correction. On Thursday, August the 11th, for the first time since 1999, the Dow, the S&P, and the NASDAQ all had all-time closing highs. So that was quite a thing to celebrate for the current bull market. However, it does have the question: can stocks continue to climb from here, or are they perhaps due for a correction? Most important thing is, now that we're heading, as we're approaching the 15th of August, we're heading from this mid-August to mid-October is the worst time of the year for stocks historically. That means that we've had this great run, but it's been a seasonal rally through July and the first half of August. Now we're into a period where we could see a seasonal correction. Markets aren't ridiculously overvalued. I mean, the PEs on the S&P are running a little ahead of growth, 20 to 16%, but not enough to write home about. And again, something that's indicative more of a moderate correction than a big sell-off here. So we could still I don't know, maybe a 5% correction over the next couple of months. Things that could influence the market certainly is the U.S. election, depending on uncertainty over who might be the new president and what general policies they may try to bring in, if there's going to be any change or not, could still have an influence. But most importantly, I think what we also want to look at here is that even as we've reached these new highs, momentum indicators are starting to tell us that perhaps we're getting due for a pause or maybe even a correction. I'll start here with the NASDAQ. As we can see, it's had a great rally up here from 4,200 to 4,800. Potential resistance 4,900, 5,000. But look at this, we're getting quite overbought here on the RSI, and we're getting a negative divergence starting to build. Advances in the index, but lower highs in the RSI tell us this rally is getting tired, could go sideways, could correct back for support in around 4740, then 4700. If we look at the Dow for another example here, we can see that we've taken a run here at this July high, but we might actually be forming a short-term double top, and we have a sideways channel forming between 18,250 and about 18,650. Again, we can see that as this rally has progressed through the year, we've had a negative RSI divergence, as telling us upward momentum is slowing, potential for a correction, perhaps down to the bottom of this channel, or this 50-day moving average here in previous breakout point near 18,150. Finally, I'll just show the S&P here, hanging around 2,180. Same sort of thing. It's come off a double bottom in February. Nice initial rally consolidation. Now it's into another rally phase. How far can it get? Well, again, we're seeing that this upward momentum is starting to slow here, but it hasn't gone under. The RSI hasn't gone under 50 either. So we're not talking about a downturn. We're talking about a pause within an uptrend. So we could see the S&P bounce around in the near term. Initial support here near 2145, 2135, or the 50-day moving average near 2120. So a bit of room in the short term for a pullback in the S&P as well. The other thing to note is, of course, some of the reasons we do get for the seasonal correction, our earnings season winds down, and people start to look ahead to the end of the year and readjust their expectations. So we've got a couple of weeks here in August where we could see a bit of consolidation or even a correction, but overall it does look as though the underlying uptrend for the markets remains positive, but in the near term we could see some choppiness.